Hey everyone, welcome back to the channel. If you're a homeowner, buyer, or just love all things real estate, just like I do, this one's for you. Today we're breaking down the major trends shaping the market right now, what's happening, why it matters, and what it means for you. Let's dive in. Now, let's talk about interest rates because let's be real, interest rates can make or break the deal. We have seen rate cut after rate cut, and fixed rates below 4% could be the new norm. But we're still not seeing buyers coming off the fence. Their sales activity is just not where it should be for the amount of interest rate adjustments we have seen. And on top of that, some developers are now starting to provide 100% loan to value ratio. It's a bold move, but they rather make the chance to get the inventory sold and deal with any repercussions of it late down the line. So we have seen in the last 6 months the support from the governments, the policy infrastructures like CMHC trying to support developments. Remembering that housing starts are an important indicator of the economy. I mean, just look at Calgary. They're at best trying not to exasperate the situation anymore. So we've got government infrastructure that we should be looking to see what kind of steps are they taking to support the economy, to support the local housing market, because that tells us volumes as to what they're thinking and predicting. And if they're making these moves, then maybe we're in for a little bit more of this rocky market before things settle in. One of the biggest market drivers right now is inventory. New condo listings hit a record high in February with 2,600 listings. For pre-sales, the government has extended the time from 12 to 18 months for developers to secure their project financing. What this meant is before they had 12 months to sell a certain amount of units in the development to pacify the lender so they can get a commitment on financing, but now they have been given 18 months to do that. This tells us volumes on how long this recovery could take and how the policymakers are treating the current situation to ensure they protect the pre-sale and investor market. We're seeing low inventory counts on the single-family sector compared to the condo sector, but with the economic concerns, buyers are still reluctant to make a move. Unless they see value, they're not pulling the trigger. In this market, you have to strike a balance between time and value. If you are a seller and you want to wait for the right buyer who's going to see the same value in your home that you do, then it's going to take time. On average, it is taking 16 to 40 days on the market. So if your home's been sitting on the market longer than that, you do want to revisit what you can do to freshen up the listing, make it more attractive for the buyers. So where are things headed? Well, no one has a crystal ball, but experts predict 12 to 18 months before we see a new balance. The economic gravitational pull is just too strong right now, and it's going to take time for all the policy assistance to create a forward momentum. We're still experiencing sales in the single-family detached taking place within 10 days on some properties that are priced really well. And it does suggest that buyers are willing to pull the trigger when they see homes that are priced very sharply and they can see the value in it. We're also seeing a bulk of new listings that are just recycled inventory that is being refreshed on MLS. So it's not necessarily to say 2,600 new listings are coming on the market. A bulk of them is just old listings that haven't sold that are getting refreshed back on the market. But nonetheless, it is adding more because sellers are not making a decision to take the homes off the market. They're just trying again with possibly a new price. So for March, we'll continue to see more homes coming on the market. Sales will uptick slightly for single-family homes as this market is less than kind for that sector than it is for the condo market. But before I share my final tip for buyers in this market, I want to say thank you for watching all the way to the end. And if you're looking to make a move, I'd love to connect with you. And if you're not quite ready yet, then I'm happy to help you from a distance by putting out these videos. So I wanted to share, if you are currently looking to purchase a home or a condo, the pace is going to stay the same, and sellers are not necessarily pricing properties where you're expecting to purchase them for. So my little encouragement for you is this: if you are looking to purchase a home and you're on tour and you see something you like, but you feel that the price is too high, then I suggest that you have a conversation with the listing agent to see what the seller's expectations could be. Because for the most part, the list prices are not necessarily where the sellers are expecting homes to sell. How much spread there is will depend on the situation, but simply passing it up and not writing on it will not help you to gather more of that information. The last home that I sold in Richmond, West Wind area, we knocked off more than $100,000 off the list price. Also with the condo that I've recently sold, we've knocked off 20% of the list price because the sellers were willing to negotiate. They just needed somebody to come to the table. So if you have a home that you like, but you feel that the price is too high, or that you want to be polite and you don't want to make an offer that's offensive, have a conversation. If the listing agent is encouraging offers, I suggest you go in and try it out. There's absolutely no harm. I hope this information has been helpful to you. Until next week, happy house hunting.